And we'd also like to provide some interesting insight and, of course, spark a conversation. So, there we go. So what is new or different this year? Well, we have recently reviewed our definition of the mining industry. So I want to touch on, what do we mean by the mining industry and what activities does that cover? We've also tweaked our forecasting system and some of the key data that we use for 2017. More importantly, we are starting to adjust how we are communicating our forecasting in our reports. So traditionally, we have produced forecasts that talk about hiring needs and how many people we need to hire, the industry will need to hire over the next decade. Well, we've also sort of begun to shift our focus toward the labor demand and labor supply. And this has been a bit deliberate. And it's sort of to match our research with MIR's mandate and programs, which are all about maximizing labor supply in the industry. And so we're looking to position ourselves to be able to analyze that on our research team. And so we'll see some of that in this presentation. So I mentioned the definition of mining. So this picture highlights our definition of the industry and how it compares to NRCan, so Natural Resources Canada definition. Just to highlight some key differences here. In the area D, we do not consider indirect employment. We're strictly sticking to the mining industry in our definition. So direct employment in the mining industry. Area C, Natural Resource Canada goes further downstream processing than we do in the mining industry. So we sort of cut it off at certain downstream manufacturing and fabrication activities. And then Area A, we have also started to incorporate other activities that are very much a part of the mining industry, but that are not don't naturally lend themselves to some of the data that is publicly available and the data that we collect. So one would be oil sands mining, as well as certain activities in exploration, the professional activities, geologists, engineers. So I just wanted to touch on some of the main differences in how we're characterizing the sector. So we have flagged 4 distinct mining subsectors, and here they are: exploration, extraction and milling, support services, and manufacturing and fabrication. So this is how we characterize the industry. And when I refer to the industry, say employment in the industry, I'll be referring to one or all of these subsectors. And so this sort of sets the stage for the rest of the presentation. And just to give you a quick chart on what that looks like in 2016, this is how our industry employment is broken down based on that definition of mining that I just showed. So according to our definition, we can see about half is in the extraction sector. All right, now that we got some of that definitional stuff out of the way, I wanted to share some trends in Canada's mining labor market. This will give you an idea of some of the factors we're looking at, and of course, how they are relevant to the mining labor market. And we're always coming back to how does it impact the ability for the industry to compete. So these factors, when I talk about, they usually come in two sort of flavors. One would be economic factors, so we're talking about things like business climate, prices, that kind of stuff. The other side is demographic factors. So in this case, we're talking about the composition of the population. So how are they distributed by age, and diversity, gender, immigrants, non-immigrants, indigenous people, that kind of thing. So that's sort of the two main facets of this. and let's begin. So the first thing we usually look at in our program is commodity prices. It's because this usually sets the stage for the labor market we are in. It is hugely impactful on everything labor market. Here we can see, in this picture, we can see the evolution of various prices over the last 3 decades. I note the dramatic increase around the mid-2000s for many of these commodities. And then that was followed by an equally dramatic fall or correction at the beginning of this decade. So to bring it back to the labor market, so how did the labor market react to this movement? And you can see it is quite dramatic when we start in the mid-2000s. So how, we're asking ourselves, how did the labor market respond to that? Well, I have a picture here that shows unemployment in the extraction sector over the same period. So the yellow line shows unemployment, the unemployment rate, and for the extraction sector, and the blue line represents all industries. The shaded area there shows the periods where the unemployment in the extraction sector exceeded all industries. So we can see a couple things here. We can see that unemployment in extraction is, 1, it's generally lower. 2, it's relatively more volatile. So occasionally it will move up above overall employment, but then it moves back down. Except when we are looking at this last period, starting around 2014, we can see unemployment in extraction has sort of had a run of being consistently higher. And this would be related, we feel, is related to the sustained price falling that we've seen in the previous slide. So one of our main questions is that we're asking on our research team here is, is this an anomaly, or is this the new normal? And are we going to continue to see similar patterns like this in the future? So just to go back, if I can. No? No? Yeah. So, we're seeing a very large swing in prices. Is this something that we can continue to see? And then is this the ultimate outcome that we're going to face in terms of unemployment every time we encounter that? So now I want to turn to, that was an example of an economic factor that can impact the labor market. To give you an idea, I want to now turn to a demographic factor. And this picture here shows the percentage of employment who are over 55 versus who are under 24 years old. So this is an age picture here. And what we can see here is signs of a growing age gap. So this could be problematic to the extent that younger generations appear to be disappearing among the mining workforce. What we do not fully know is to what extent this trend is related to the mining industry itself, or whether this is related to overall population demographics. And I think it's likely a combination of both. But in the latter case, so if it is related to overall population demographics, this may be a really difficult problem to counteract, given, with an overall decline in younger generations overall. But then we are also looking as to how much it's related to the mining industry itself. Is it a case of, are there just not enough young people, period, or is it a case of, are there not enough young people entering into the mining industry or the mining workforce? Those are two very different questions and different solutions. So that's a picture of age. Next, we can talk about diversity within the mining industry. So our research team typically tracks 3 main groups. Of course, there are more groups, but there's 3 familiar groups that end up in our research. One would be women, one would be immigrants, and one would be indigenous people. And the most common observation that we follow is, how is a particular group represented in the industry? And we usually say a group is underrepresented if their presence is significantly different than what we observe in the labor force overall. So for example, I have a slide here. We have women, and this is from the 2016 national report. Just to show a point here, we see that women make up about half of the overall labor force. But then when we look at certain occupations that are relevant to mining, this share is reduced to about 27%. When we look at the mining industry by itself, this share is now reduced further to 17%. And then when we combine these two, so that is both in the mining industry and in our occupations that we are tracking here, it is even lower at 12%. So what is the takeaway here? Other than that women are not very well represented in the mining industry, they are also underrepresented in many of these occupations that we're tracking, regardless of industry. So we're trying to highlight the questions about whether this is an occupational problem or is this a mining industry problem, and explore those differences. So again, I said, is this related to occupations we track, or is this related to the mining industry specifically? So I have a picture here that shows how women are represented in the mining industry for the 70 occupations that we track. And that's captured on the horizontal axis there. The vertical axis shows how specific each occupation is to the mining industry. So, for example, underground miners are very mining specific and therefore would be high on this axis versus, say, financial analysts who would be low. So from this picture, we see a distinct pattern. That is that we don't have an example of an occupation that we track that is both highly mining specific and has a large share of women in it. So, and that is that region here. So this is referring to this northeastern region of the graph. It would be curious to have an observation of an occupation in that region, because it would tell us of a highly specific mining occupation that has a large share of women in it. So this obviously highlights a challenge for the industry in attracting and recruiting women into mining-specific occupations. So next, I want to talk about the employment outcomes of women in the industry, specifically in the extraction sector. So this graph shows the share of women in full-time employment versus part-time employment over the last 3 decades. And here we can see that women are well represented among the part-time. In many cases, over half for the length of that period. Over half are part-time people are women, yet less than 20% of full-time employees are women. So it illustrates that this is further illustrating another challenge for women in the industry, and a gap between their outcomes of those who end up in the industry. Okay, so I have covered a lot of various topics and trends, diversity, prices, that kind of thing. I want to now turn our attention to our forecasting system for the mining industry, which is one of the main things MIR does, and it's featured in our annual report every year, particularly our forecasting on industry employment. So employment gives us a window into labor demand, as I mentioned, which is employment is an observation of labor demand. So we produce an update on an industry level employment forecast for the mining subsectors that I refer to, and we do this to get a sense of, what is the level of labor demand in the industry, how is each subsector, how may they be different, and then what we do in our research is we drill down and analyze what employers are looking for, how that might be changing over time. So here is our overall forecast for industry employment. In the blue shaded area, we can see the forecast part, and then going back in time, we see the historical data. In our forecast, we provide 3 scenarios, which you know, gives us a little more leeway in terms of reporting on the industry's needs over time. And in this picture, we can see it ranges from about 160, 170,000 to as high as about 230,000. We feel this is fairly conservative, but it gives us an idea, a basis for further analysis. Okay, so next we have our 4 subsectors that I've already touched on. So here we are crawling into our industry-wide forecast, and we're observing some differences, notably in the exploration sector and the support services sector. So those would be the 2 on the right. These sectors tend to be more volatile, and hence why they have wider scenario bands. Then I just want to touch on manufacturing, which is in the bottom left. Here we see a sector that has been gradually declining, and especially with respect to its labor needs. So there's curious things there that we talk about in our report. And then in the extraction sector, which has been increasing over time, actually, and is relatively less volatile than the support services and exploration sector. So in each of our baseline forecasts, which are the forecasts shown in yellow, we have employment levels modestly increasing or staying relatively flat. So the next thing we do is we ask, you know, what is the workforce adjustment that will be needed for us to achieve the employment forecast that we have set up. So that is this, and we call this net change in employment, and this represents the adjustment that will be needed, that will be necessary for the industry to remain competitive, sustainable in the long run. And so we can see this range has a range. It can range from a loss of 25,000 to a gain of nearly 50,000. Under a baseline scenario, it's about 12,000. And that's over the next 10 years. This is consistent with the baseline forecast of our previous annual reports. The only difference I would say would be the bands are wider. And the reason for that is we have improved our data, our underlying data. But our underlying data had more volatility, so the bands got wider. But overall, we're pretty much consistent with the previous reports on the baseline, which is about 12,000. So again, this is the adjustment we need to remain competitive. So this is a perfect place, this sort of caps off labor demand. This is a perfect place to pivot now toward labor supply. And so in my opinion, labor supply is where the industry faces its most significant challenges. So, you know, whereas labor demand is kind of like the weather, it goes up and down, it is what it is. You know, many of the mining companies are price takers, and they kind of accept the business climate that is given to them, and they respond to that business climate. Labor supply is a different issue, and it's all about the ability to find the workers that are in demand. And so for the mining industry, the mining industry is already at a disadvantage here, given the many operations that, you know, don't exist in what we would call a thick labor market. So what do I mean by that? I mean a labor market that has a large population, that has many employers, that can support you know, several potential matches between employers and job seekers. There are certain things about the mining industry that undermine its ability to operate in a thick labor market. And therefore, we see signs of labor supply issues. So MIR has already started to really focus on labor supply, and we've also been building it into our plans for future research. So, this is where we've been turning our attention more intently than before. I just want to also, what do I mean by labor supply? So we're talking about the labor inputs that people are willing to provide for given certain factors. This can be a tricky thing to measure since it is not just those who are employed. There is no concise measurement of labor supply. Typically, it is not common for a labor economist to say labor supply equals 5. That's not a thing. Instead, we prefer to talk about degrees of attachment to labor supply. So for now, our best measurement is the labor force. So what do I mean by the labor force? Well, the labor force describes those who are either employed or unemployed. And by unemployed, that means you're actively looking for work. So that is those who have demonstrated a willingness to work. So our first goal here is to develop a profile of the labor force. So what we want to know is what are the key characteristics of those who are in the labor force, and also for those who are in the mining labor force and then therefore attached to the mining labor force supply. Mining labor supply. So here's a picture from 2005 to 2015. The overall labor force for everybody grew by about 2 million people. So this slide is showing the winners and losers by sector or by industry. And so that's the percentage of that growth. So these columns here add up to 100. So where is the labor force going into, and where are they going out of? What is interesting here for me is the shift toward the service-producing sector. So those are the bars indicated by blue. And while you have the goods-producing sector has not accounted for a large share of the increase. While you have some winners in that category, there is signs that the goods-producing sector is shrinking overall. But still, the mineral extraction sector has represented some of the growth in the goods-producing sector. But this is really something that could be relevant if the service-producing sector is going to continue to be a major pulling force on labor supply. It's going to shape what your labor force will look like down the road, and also your ability to attract and recruit workers. So next we have the same very similar picture. We're talking about the same growth, the same 2 million people added to the labor force, but this time we're comparing by occupational categories. So this shows the top 10 and the bottom 10. I would say, first of all, the mining industry draws from several of these categories. So it's not like we can point to all the losers and say the losing categories and say that mining is in all of them. No, mining draws from pretty much all of them. But I would note the drop in a number of manufacturing occupations in the bottom 10. So again, these are occupations that are not growing in terms of size of labor force. Okay, so moving on again, we're looking at profiling labor supply for the mining industry, giving an idea of who is more attached to the mining industry, who is less attached, and in this case, who is exiting and who is entering. So this comes out of MIR's current labor supply model. We have a labor supply forecasting model that we do every year. So our model has two main components, entries and exits. And we look at both separately kind of, but then we add it together in this sort of accounting exercise to kind of look at what will the labor supply look like down the road. So what we do for our labor supply model is look at a set of occupations that we track, and then we estimate the entries and exits overall, and then we look at the share that the mining industry, that is relevant to the mining industry, and how that may be different. So here are our main categories of exits in this picture here. So this covers a period of 2017 to 2026, and we expect that most of our exits for the industry will come from retirement. And I just want to note also that this is for the industry. So for a single company, this may look different. Obviously, turnover will be much more of a factor, but turnover from one company to another is not turnover for the industry. So we're really looking at where are the exits from the industry, and we have pointed to, and our labor supply model has pointed to retirement as being a major force in that regard. All right, so this is that same picture, exits by category, but now we've spread it out by different occupations. And we can see production occupations is the largest, but for different reasons than, say, professional and physical science occupations. So in production occupations, we see more retirement going on, or we expect more retirement going on, versus in professional and physical science occupations where we see more out-migration. And I think this is something that we would expect because when we do look at certain migration habits among people depending on their education level, we see the more educated you are, the more likely you are to be mobile. So this picture definitely makes sense, but also highlights, where are the exits coming from for various occupations. So the other side, that was exits. So the other side of our labor supply model is looking at entrance. So we have three categories of entrance here. We have in-migrants, school leavers, and other. And from our model, we can see we expect about half of our new entrants over the next 10 years to come from school leavers. What that means is, I'm not a fan of that word, the school leavers, because it sounds different, but it means people who are transitioning out of their school life and into their working life. So they're becoming part of the labor supply picture. And we expect them to be a major part of the people who will become available in the foreseeable future. Okay. Okay, so this picture shows our entrance again, but now spread by different occupations. I think the obvious thing to stress on is production occupations. And if you're curious about what that means, we published in our appendix what we mean by that in our reports. So we have a list of production occupations in our report. And the major takeaway here is that production occupations are an absolutely major draw for the mining industry. And we expect that that's where the mining industry is going to draw from more than other occupations. I think part of that is obvious, but it highlights sort of there is a definite dependency on those types of occupations for the mining industry. In addition to some of the other ones, trades is obviously important too. And this picture here highlights the difference between how those occupations are going to be pulled from versus, say, in other industries. So, okay. So, I've talked about labor demand. I've talked about labor supply. It's usually at this point where we sort of combine everything together and talk about the primary issues that are afflicting the mining industry's labor market. And what we normally do is we combine those elements, and we on the forecasting side we do a comparison. So before I get to that comparison, actually, here's our hiring, our traditional hiring forecast. So that's this is a table that highlights what the hiring needs will be over time. So remember, I talked about net change in employment. So that's the adjustment needed from business cycle activity. But now we've added some demographic elements in here. So we have now the retirement, and we have the non-retirement. So these are exits. So all of these things generate a need to hire people. So this has definitely got a lot of traction for us in our reports, because the industry is very much interested in, well, you know, what do we need? What is the level of effort that we need to put in, or what are we facing in terms of making an adjustment to make sure that our industry continues to be sustainable? And that's what this table does. It combines all of those things, the economic things, the demographic things, puts them into one table, and highlights the overall need to hire people. So looking at the baseline scenario, we're looking at roughly 90,000 people, 87,000 people that will need to be hired over the next 10 years for these various reasons. And then the expansionary and contractionary scenarios show different scenarios that we have created based on, well, what if prices did something different, or what if various other factors did other things different. So that's our overall forecast there. But then, like I said, we want to be able to compare this to, again, bring in the labor supply side. So the labor supply side is already here in the sense of exits, but in this case we're bringing in the entries. So that's great that you need to hire 90,000 people over the next 10 years, but what we're really interested in is how possible or how capable are you of doing that? What are some of the risks that we have that threaten your ability to hire those 90,000 people? And that's what this picture does. So we compared our hiring forecast with our entries forecast. And what we get, and so what we do is we say, okay, well, what percentage of the hiring that we need to do we think is going to be unfilled over the next 10 years? Now, obviously, over those next 10 years, we'll see adjustments, things will happen, movements will be made, initiatives, programs, and things will change. But based on this forecast now, moving forward, going ahead, are there any signs that we're not going to be able to hire those 90,000 people? So here's a picture by occupation that our forecast is highlighting where is there an intensity here of unfilled vacancies. And we can see we flagged foremen and supervisors and professional and physical science occupations, especially as occupations that have been identified as at risk for being challenged to fill. And that's what this is doing. So it's kind of bringing everything together into one picture and helping us identify where those risks are. Okay. Okay. So that sort of covers a lot of what was in our 2017 report that is coming out, or that is out. I just wanted to also touch on the fact that we also survey our employers every 2 years, and we also ask them what is important to you, what is your significant challenges, and here's a slide that shows that picture here. I'm going to note diversifying the workforce as an important one. That one showed up fairly strong in terms of the level of agreement that that's important. And of course, all of these are important. We're just looking at what's relative to what other things. All right.
Well, thank you so much, Jamie, for all that information. I really appreciated that you took the time to explain some of those technical terms, because I know we often see them in the report, so it's good to know exactly what you're referring to. So thanks for that. So now it's time for our Q&A portion, and I'll invite everybody to go ahead and go into the question and answer pod on the right-hand side and let us know what you would like to ask Jamie. Well, we've got him here. So while you're doing that, I'm going to go ahead and start with a question. So Jamie, what do you see as the biggest challenge for our industry in ensuring that we can attain the projected level of supply that we need? So you pointed out that supply is where we have a real opportunity to make some change, and that we've got these huge labor gaps. So what's going to be the real challenge in attaining that?
I think the biggest challenge is sort of the collection of things that I mentioned that sort of undermine the industry's ability to respond. So, for example, you want to increase your diversity. Well, there's a number of things that are always going to be challenging that or eroding that ability. So, for example, you have a volatile industry. Well, what happens during the first recession? That's going to cause a hurdle. And then there's other things like the fact that, again, we're not operating in a thick labor market. So what I really want to stress is things like that are long-term things. They're generational, and they're going to have to sort of withstand challenges over time. And so it's really, the solution is holistic to it, and it's going to take patience. And the real challenge is when I see, oh, it didn't change in 3 years. That sort of mindset is the biggest challenge, I think. When we don't see immediate results, when we have to wait for the generation of women to come into the industry and then look back and say, ah, there it is, we did it. I feel like that's going to be a challenge in terms of communicating and messaging. So. Yeah.
Thanks for that. We've got a couple more questions come in. One is around national occupational classifications and its terminology. Is foreman the official term? Because it is a gendered term.
No, that's just from our that's just a term that we used to group certain occupations. I'd say no in the sense that we do use Statistics Canada a lot, and they have official terms. However, when we were grouping these together, we had that category.
Great, thanks. So we'll look at that in our reports a little bit closer. Another question has come in here, noting that Canadian exits from the mining industry are really been dominated by retirements. In 2016, BC exits were about 50% retirement and 50% in out migration. That's a real challenge. So do you believe that the difference between the national number at 70% and in BC at 50%, is that because of the specific year, or is it something unique to British Columbia that they have that lower number?
I would say that any differences between this national report and anything we've done on a sub or provincial level are not very comparable. We have I would say that if you're coming to the same conclusion that retirements are important and have a significant share, that's the conclusion. I wouldn't say, I would be very careful to compare 50% to 70% in this case. but I would say come away with the same conclusion. Sorry, the question went away, and I just want to reread that one. I can't. Oh.
Okay, well, I think if the person that asked that question wants to follow up anymore, we'll get them to send us an email and we'll go into more detail. We've got a couple more coming in. Jamie, where do you recommend, as employment service providers, train their Aboriginal clients?
I don't know.
I think that means, like, what is there a certain occupation that should be targeted when we're looking at training Aboriginal clients, or perhaps we're looking at like sectors? So is there a specific sector or occupation you think that could be targeted?
So I think okay. I think one of the biggest challenges in terms of Aboriginal participation is participation itself. It's less of a question of targeting mining-specific training and more of getting participation levels up in the first place, and that begins a question of like often when we look at these things, we're looking at the ones we're looking at the group that isn't there, that isn't showing up, and then you have the people who are there, and the question is less about mining-specific training and more about just participating in the labor force. I know that doesn't really answer your question, but
well, I think I'll throw a little bit of a commercial in here.
Sure.
MIR does offer a program that supports Indigenous people in getting their first job in the industry. Now, that's not an occupation specific, but rather related to attaining the level of essential skills and work readiness that's required to get their first job in the industry. And that program is called Mining Essentials, and you can find out more about it on our website. We've got another question coming here. How does the MIR forecast, Jamie, compare to 10-year forecasts in other industries? So is everybody facing this kind of big challenge around getting labor? And can you think of any comparables to other industries that are very thin, just like mining?
I would say there are other industries that are challenged, and there are other resource-based industries that are challenged. I know other sector council programs that talk about their need to hire over the next 10 years. I think what makes mining unique is how it is forced to sort of operate in a world that isn't, say, downtown Toronto, where there's a lot of people, there's a lot of activity, there's hustle and bustle, there's opportunities for matching jobs, people with skills, there's amenities, there's schools and training, and you have basically everything at your doorstep. And the mining industry isn't afforded that luxury. So what really makes it thin is that fact largely. And then you have other issues like lack of diversity that will take time to overcome. I think that is also something you see in other resource sectors as well. But I would say there are other sectors that also tout forecasts that probably are not as comparable. So like I'd say even the construction sector isn't as comparable to the mining industry. Given that industry the way it is, the way you need to forecast for that, it's different, and it's sort of inherently different than the mining industry.
Great. We've got another great question coming here. Jamie, can you tell us a little bit more about how our labor market forecasting and models gets more specific based on region or occupation or location? Have you done any work that looks at that, and what's available?
Yeah, so we obviously are frequently going into other provinces and regions and developing a specific custom forecast for those regions. And on the regional level, and we've done, across Canada, really, BC, Ontario, Saskatchewan. We've also started to explore sub-regional a bit more. We've started to get maps out, actually, and start looking at what is the underlying population underneath where the mining activity is. So what really is the mining operations in a given region working with in terms of population? I mean, everything starts with population, right? If you don't have population, now you're needing to find labor somewhere. You need to find employees, and so you're looking at elsewhere, right? So we're starting to really get under the hood of this. We're starting to go sub-regional. We got mapping software out now, and we're going farther on the regional side. On the occupational side, yes, all of our forecasts go deeper. Obviously, not afforded the luxury of going occupation by occupation in a presentation such as this, but so it was largely broader groups. But each one of those categories represents more specific occupations for the industry. Usually, what we do is we provide the hiring needs for the occupation, available talent for the occupation, and we do a comparison, a gap analysis. And what we're really trying to do is highlight: is there a flag or a risk that we should be concerned about in a particular occupation? Moving forward, I put a pitch in for picking on about 10 occupations and really going, what is the difference in retirement between these two occupations? What is the difference between, mobility, migration, and skill, talking about the different skills set different needs for each occupation that we are interested in. And rather than doing like 70 all in one shot, we're going to really like crawl under it and really provide value in that way.
Thanks. We've got a great question coming in here, and it's one that I know we have been talking about quite frequently, so I'm excited that somebody asked it. Do you think that automation in the mining industry will become more critical in the efforts to curb the lack of incoming talent in the mining sector? So we have been talking a lot about automation.
Yeah, absolutely. Yes, absolutely. Automation is important. We are looking at automation to the extent that we can at this point. I would note there are a few challenges with automation. One of them being just because you have it, how is it embraced and adopted by the industry? How is the industry able to integrate it into its operations? Are there parts available if something breaks down? Those kind of questions. So it's not just a matter of it existing, it's a matter of it being adopted, really. And what does that look like? And what are some of the, obviously, what are the labor challenges with that? Because now you're going to need a different type of person to operate or maintain or whatever, with different skills to operate the new type of machinery that we may see. So yeah, we are looking at that. I will note it is challenging to predict without much historical precedent. So what does it mean to have a driverless truck come on the scene? Well, we don't have an example of that in the past, so it's really hard for us to know or understand what that impact would be. But we are absolutely engaged in monitoring that and bringing more information for that moving forward.
Jamie, in your recollection, have we done any detailed analysis to see which professions or backgrounds, I think probably factors of diversity there, typically fill management roles, engineers, finance? So what is the person that gets into those roles, what do they demographically look like?
No, I have not. I have not done any detailed analysis on that. That being said, we are again, that's a really great point, and that's something that we would like to look into in terms of, how can we just characterize the people in entry-level roles beyond their age, because obviously age is probably the biggest factor in terms of where you are in your career and your role. Can we crawl deeper than that and say, is there a tendency one way or the other on other characteristics, especially the diversity thing is obviously relevant. And we can see, and it's not just about where they are, it's about how they got there. What is the pathway? How did someone end up in this role versus not this role? But no, I can't say I have a detailed analysis on that right now.
So we've got a follow-up question here based on the BC retirement percentage question. Can you tell us if there is a major difference in mining labor markets across provinces? So how different is British Columbia's labor market from Ontario versus Quebec?
Yeah, they're all very different in their own way. The biggest difference is obvious. It's by commodity. It's whatever commodity. At one point I could characterize every region by the major commodity that is coming out of it. So they're different to the extent that there is difference in the underlying commodities that are being produced are different themselves, and they have global markets that operate to their own tune, and so to the extent that you have, I remember, to give you an example, diamonds in Northwest Territory. I had a diamond forecast that we had that was going up while all other base metals were going down, and we were just scratching our heads as to why this would be. And really we learned that, obviously, like, this couldn't be more obvious. Diamonds are not the same as base metals, so that really impacts what your labor market's going to look like in that region. And then obviously you have, say, an area like BC, which is a major port, is very integrated with Asia markets. So whatever's happening over there really is factoring in to the labor market in that province. And then you have other regions that may not be similar. And then you also have oil sands mining, which is its own thing. So really my answer is basically that to the extent that these commodities all kind of are their own animals, yes, you see differences.
Well, thank you for that, Jamie. And I think we're just about at the end of our Q&A session. So thanks to everybody for participating. And if you want to follow up with Jamie on any of those questions, you can go ahead and email us here at Mirror, and we'd be happy to continue the conversation. But unfortunately, our time has run out. So thanks again, Jamie. And I invite everybody to stay connected. So there is going to be a blog posted on this webcast on our site, so we can continue the conversation there as a group. And I hope you guys come out next month. We will be joined by a panel who's going to be talking about how to source international talent from your own backyard. So that will be a great one. So I hope to see everybody again online next month.